GM. So, daily levels, Tuesday, 11th of June, as we do the massive 24-hour grind. Who's on the grind with me today? Started at 4 a.m. UTC. We are now at 6:50. We're coming up on the third hour. Almost 3 hours done, and I'm going to be here until 4 a.m. tomorrow. So, much earlier daily levels than usual because of that. And basically, Bitcoin is showing you the power of volume profile whenever it's not trending. It also is useful for trends in a different context, but the best use case of a volume profile would be in a ranging market like we have here. And so Bitcoin was unable to break out above 70 a couple of times. It couldn't break 72 at the upper end. But when you draw the distribution across all of the price action up here, you can see that the vast majority of it was distributed between 70 all the way down to 67. And we fell back inside that value area, as it's known, which is the blue zone. Tried to break out the upside, could not. So it followed the red path that I mentioned the other day. Couldn't break out, and boom, down we go. Ended up just collapsing straight down into the lows. And I think from here, it's likely to hold the lower end at least briefly. But I do think that longs are really, really, really badly offside, potentially. Not even potentially. I think longs are super, super, super offside. Because there's just a huge build-up. There's been a huge build-up of open interest since the lows over here to where we're currently at. 27,000 contracts on BTC, and that's in this consolidation here. So, we're in a consolidation here. Price has gone sideways, right? Price basically hasn't moved. It's actually below the mid. The midpoint of this would be 68, 69. But anyway, we're in this consolidation, and yet there's a build-up of 27,000 contracts, right? That is roughly $2 billion if you're putting it into dollar amounts, if you're trying to like visualize how much that is. That's roughly $2 billion of positions built up, 17% increase since the lows of this consolidation here. Now, there's been a lot of talk. I've told you guys this week that a lot of the open interest is basis trades. People will buy Bitcoin or buy the ETF, buy spot Bitcoin or buy the ETF, and they will short the futures. That's true, and that would equal an increase in open interest if there's a long on the other side, right? So if somebody's shorting the futures, somebody's long. And I think that is where the biggest risk comes. And that's why I think that there's a decent chance that this breaks all the way down to 62 with no significant bounce. But don't want to get too far ahead because we do have levels in between. And this value area, the darker blue zone, if it continues to hold, it's all good. But if not, we zoom out to the main value area that I talked about from this entire consolidation, this entire 3-month range we've been in. That's the target, 62. And the reason why it could unwind pretty quickly is because sometimes you have a real imbalance between supply and demand. Like you have longs essentially are just so offside that the market can't really go any other way but down. Now, I'll be really clear because I know there's a lot of people who are new here watching my videos. I am not, and one of the things I always preach, you do not predict anything as a trader. You're not predicting the future. Everything is a probability. Prediction would indicate that you know what's going to happen. Oh, this is going to happen, that's going to happen. Predict. Not telling you what will happen. And if you want to think like a trader, you should think in probability. So even if you think it's 99% certain that we go lower, make sure you still identify that 99% is not 100%. That's just a good mental model to operate from, because when things don't go the way you expect, then you'll be like, yeah, there's always a chance that it might not went that way. Now, so that's that out of the way. I do think, though, there's a very, very high probability that this is not all, basically, this build-up of open interest is not all retail shorts. That's my view. Okay? The build-up of open interest, what does it indicate? Positions. Open interest can only go up if there is a long and a short open. Right? It has to have both. If I close my long and you open a short, right? So I close one BTC long and you open one BTC short, open interest doesn't change. The net is the same. So it only goes up when I open a long for one Bitcoin, you open a short on the other side for one Bitcoin, and we both keep them open. That's how it rises. So when you hear this about open interest building up, remember that this is longs and shorts. Now you have to then dig into it and look at who is involved and which direction is most likely to be long or short. So you understand a long and a short have to open for it to rise. So there are both longs and shorts in that 2 billion that's on the screen, 2 billion of open interest. This is Velodata, by the way, website, velodata.app/short. There's actually more, because Velodata only tracks 4 exchanges, Binance, Bybit, OKX, Deribit, which are by far the biggest, but they are not exclusively the only ones. And as I see Bitcoin continuing to push lower, as I say this, there's a big spike there. I wonder, was there much, probably decent. There was a really big spike in terms of a wick down, but not much of a liquidation cascade there, really. And no, there's a bit of open interest changing on this candle. Some shorts getting squeezed out. So we'll see what happens. Probably there's going to be a strong reaction, I would guess. People have tried to short heavily into that. It doesn't seem to be going down right now. But anyway, that's getting ahead of ourselves. So looking at the open interest here, if you also go and check Coinalyze, that shows more exchanges. If you look at the aggregated open interest here on Coinalyze, it shows Binance, BitMEX, Bitfinex, Bybit, Deribit, Huobi, Kraken, OKX. So many more exchanges, so more data. So you could say it's more accurate in that sense. And on this one, since the 20th, and this one aggregates it into dollars, since the 20th over here. So before that increase on the 20th, we had open interest at 19.4 billion. And then from the lows of this consolidation, which is the same here. The reason the 20th matters, by the way, is that's when the Ethereum ETF rumors really began. And from the 20th over here. So from the 20th, from the lows before it, and the 20th over here, the lows here, at this level, we have a 2.5 billion increase, okay? So I'll go to Velo because Velo has more other indicator tabs. But regardless, there's about 2 to 2.5 billion of open interest built up, right? Some of that is going to be people who are directionally long. So basically, like the way you would trade, you open a long and you're just long. Some people are going to be directionally short. You open a short and you're just short. Other, and this is a lot of the participants, especially bigger players, are going to be market neutral. This is what market makers will do. They'll be short some of this, but they'll be long somewhere else. And what they're trying to do is just capture small price movements or inefficiencies or imbalances or whatever. So, you could say, let's imagine there's 2 billion of open interest. There could be 500 million worth of shorts that are open, but they're not naked shorts. Naked meaning they don't have any hedge. They're just betting on price to go down. But they might be neutral. They might be market makers who are short, but they're long elsewhere. So with that, I'll actually do this live. Or not live, but as I'm recording. That is hour number 3. Let's go. Get your push-ups done. I suppose I may as well do them here too. Right. Go. As soon as you, well, you probably already have done this by the time you watch, but strong body is a strong mind. So, the point is, not all of this, a lot of times I see people misunderstanding open interest by saying, oh, 2 billion of longs. There's 2 billion of longs open. There aren't 2 billion of longs open. There aren't 2 billion of shorts open. There's 2 billion positions. But the context that you would apply to it is that Bitcoin is in a bull market. Bitcoin is near all-time highs. And over the past couple of weeks, since the 20th, right, since the ETH ETF rumors and then the actual approval came, the market started to get a lot more bullish. At least bullish in terms of the sentiment, what people are saying, their expectations, all that kind of stuff. And so traders will definitely be positioning themselves long. And the retail side, if you want to consider it like retail or the dumb money or the weak hands or whatever, the ones that are at most risk, generally in these type of setups will be the longs, right? So it's okay as long as Bitcoin can hold in this range, right? So it could go slightly lower and still be fine in terms of, if I get my path on, it could even go down, come back inside, and as long as it holds in there, it's okay. But there is a risk at that level breaking for a further unwinding of positions. So with all of this build-up of open interest, I would say the biggest risk is if there's a break below this purple box, then you have plenty of gaps below and lots of room for price to actually drift down towards where I have that blue cross, blue X. Right now, as I record, we've just touched down into that daily market structure level and the support level around 67.3, which is a key level, an absolutely key level that should hold for bulls, really must hold for bulls, or you're starting to look at deeper corrections. And it's just something to be mindful of, especially as we go towards tomorrow, which is a big day with the Fed meeting and the inflation data, which the market is definitely going to be taking positions on. And depending what the Fed say, what Powell says at his press conference, it's going to affect the market too. And the overall thing, is this market is still bullish, right? Go out, higher time frame. Bitcoin, when you zoom out, is still just in a range between 60 to 73 with a wick below or a brief dip below 60 back in early May. So we could go all the way down to 62, still be fine. Just chop around for a bit and go higher later. The question of people, and I see this online, I see it on Twitter, like when I see bearish posts, people in the comments are super aggressive. And that's always sentiment's never perfect. You can't just trade purely off sentiment because there's no clear, reliable way to measure it. But when you're watching and reading all day, and I'm constantly reading comments online, people are very, very angry at anybody who's expressing a bearish opinion at this point, which tells me that the market is very much long and needs it to go up. And if you're ever in a position where you need it to go up, you're not in a great position. So I look at that and I think, if the market just doesn't go up for the next month, let's just say, who's going to be more wrecked? The smart money or the dumb money? It's always going to be the dumb money, right? Because if Bitcoin goes to 62, let's just say Bitcoin goes to 62 and then up to 69 and then back to 64 and then up to 80, and we don't break out until August. Who would get most wrecked on that blue path? Well, it would obviously be the retail, dumb money, short term, people who can't hold positions for any lengthy period. They're using too much leverage, all that kind of stuff. No serious smart money player is going to get wrecked if we go to 62. They'll manage that position very well. If we go below that, if Bitcoin goes, if Bitcoin were to go into the 50s, there will be a lot of blood, both from big and small players. That would be an actual trend shift. That would be a significant trend shift, a bearish trend shift. So when we can go down and still be fine, it's probably going to go down. But as long as it's holding 67, and basically where it's at right now, you don't need to, flip-flop your bias and overly analyze the market too much and just say, okay, we've dumped down into what is currently support. There is still a build-up of open interest. That is still a risk, especially if it pushes lower and those shorts are forced to close. But beyond that, I think you just want to let the market do its thing. Today, if it can't break below that level, I think today is probably going to be choppy. And eventually it'll hold and push higher. Because within this overall structure, you're also going to have shorts, right? On a low time frame, you're going to get people panicking and selling and shorting into this area. And so if price just doesn't go down, if people say, oh, it's going lower, it's so bad, and it can just chop like that, just like it did over here. It can just go sideways for a couple of days and frustrate and stop out those late shorts and just do more of what Bitcoin tends to do, which is all of this, take all that off, just what it's been doing since the 20th of May, which is just not going higher, not going lower. It's very simply ranging, consolidating, right? So it's one of those areas where I've said this since the Friday when we had that rejection. I said Bitcoin is now showing weakness and is not bullish below 72. That remains the case. All right? As long as we're below 72, Bitcoin is still in this choppy range. And when I said that, I said if it isn't able to clear 72, it's probably going to go to 67, and it's done that. There's a potential it goes to 62, but this key level has to break first, and I think it can break, but until it breaks, you're all right? Now, on a lower time frame, we have a break of structure on the 4 hour. So in this 4 hour downtrend, where Bitcoin tried to break 72, failed, it then came down into this area here, and I mentioned this last night in trading analysis. Right, where did I draw it? Over here. There was the level, the break of structure level. Okay, here we go. For bearish confirmation, this level has to break on the 4 hour, this one, and we broke it. Broke down, candle close, here we are. So, currently, this is a downtrend on the 4 hour. We have a high impulse down, sideways correction, and an impulse down. So your expectation for price action would be, if it is going to consolidate and not able to go higher, that could equal where it breaks to a new low. So you've got price moving into a recent support, but also in a 4 hour downtrend. And at that point, you're looking at, is this support going to be stronger than whatever downtrend we have here? And I think that today, Tuesday, you're probably not going to see it break lower. Because I think that as we go towards the big day, which is tomorrow, where I think the directional move probably comes. I think that tomorrow is going to be when you see if it's going to break, it'll break. And if it's going to hold and break and push higher, it's going to do that from there. So I would guess, unless there's some big catalyst today, which to me would be like Bitcoin needs to, if we go into a lower time frame, you can see it's trying to have a reversal here. Unless Bitcoin starts to fall, if it starts to fall in like that, that's when you're going to see it roll over, right? If this wick doesn't hold and it's able to just fall back into it, you're probably seeing it with a potential to just keep trending down and break lower. And for that to be avoided, you need to see some kind of move up, retest, holding, and price starting to form more of a sideways structure. If it does that, that gives it then the opportunity to break higher, right? So I think today is a very low time frame traders day where you're going to see chop both sides. And unless you see 67.3 breaking, so this wick, where it touched down into it, got a strong reaction off. If that breaks, that opens up potential for a deeper correction. Otherwise, you're probably going to see chop. Squeezes shorts up, people get long again, comes all the way down, chops around, chops around, chops around. If it just chops in this area, just avoid it, don't trade, and let the market sort itself out. And that's pretty much it for today. So in summary, build up of open interest on Bitcoin, absolutely, there has been. If longs are really offside, they're going to get fucked below 67, basically. And if they can hold 67 and we stay between 67 and 72, it's just the same range that it's been in, right? No need to overthink that range. It's just a sideways range that it has been in. Just like down here, when it looked bad, it wasn't bad. Just like down here, when it looked bad, it wasn't bad. Could be the same thing over here. Believe it or not, this might just be forming a higher low again, right? Tried to go lower, couldn't. Tried to go lower, couldn't. Tried to go lower, right? You know, for all the... I'll go to this chart because it's a bit cleaner. For all of the bearish potential, you just have a low, a higher low, potentially a higher low. So what happens if Bitcoin's just chopping like this for the next few days? Well, it doesn't start to look so bad then, does it? So the move has happened. 72 to 67 was the best directional play in terms of shorting the top of this range to the bottom. And now I think you just want to let price consolidate and do its thing. And that's it. GM. Multiple live streams today. I'm online all day. You're going to see me posting lessons, answering questions in the chats. Join me. Let's fucking grind it out. GM.